Okay, hi everyone. My name's Anya. I'm from Dallas, Texas, and I'm a senior. Today, I'll be talking about the impact of the Israel and Gaza conflict on specific industry sectors and financial markets. So, to give you a brief overview of the situation, the Israel and Gaza conflict escalated following a Hamas surprise attack on Israel invasion. It caused volatile reactions in global markets affecting tech, energy, defense and aerospace, humanitarian, and hospitality and tourism sectors. It intensified long-standing political tensions in the Middle East and disrupted international markets and strained political, international diplomatic relations and humanitarian efforts. Now, talking about the context a little bit, so global stock indices, including S&P 500, as seen on the graph on top, and Dow Jones, as seen on the graph at the bottom, sharply declined. So from October 7th, which was the day of the attack, as seen on these 2 points, there was a sharp decline. And yes, there have been declines throughout the year, but that was like really sharp compared to the others. Investors shifted from low-risk assets to U.S. Treasuries and gold. It mainly affected the energy and defense sectors, rising oil prices, and gains in defense stocks due to anticipated increased military spending. On November 24th, 2023, there was a ceasefire that brought temporary market stabilization. Now, talking about the tech sector in particular. Increased risk perceptions and operational disruptions have caused declines in technology stocks, facing major labor shortages, further complicating operational challenges for companies in the region. Companies such as Checkpoint Software and CyberArk face operational disruptions and fluctuating stock prices. Rafael Advanced Defense Systems and others have seen an increase in demand for their technologies, although they also deal with supply chain risks and operational issues. Delays in manufacturing, transportation issues, and increased costs force companies to find alternative suppliers overall. Now, talking about the oil and energy sectors, there were short-term spikes in oil prices by up to 15% due to fears of supply disruptions, though long-term disruptions are considered unlikely unless the conflict expands further. Companies like Noble Energy and the Delek Group have faced operational disruptions and increased security costs by 20%, leading to temporary suspensions and supply chain rerouting. The operational challenges have resulted in stock price fluctuations of 5 to 10%, raising investor concerns about long-term stability. Insurance costs for shipping through the region have increased by up to 25%, and there is an increase in costs and delays by up to 30%. And moving on to the defense and aerospace sector, conflict affects Israeli and U.S. defense companies such as Elbit, IAI, Rafael, Lockheed Martin, and others. Supplies include Iron Dome F-35 jets and Patriot missiles, and around $3.8 billion annually support Israel defense efforts, which is much greater than a bunch of other countries that the U.S. supports. Lockheed and Raytheon stocks rose from 4 to 5% after contracts and global defense spending increased by around 10% in 2023. Now, talking about tourism and hospitality, Israel saw an 81.5% drop in tourist arrivals in Q4 of 2023, which is when the conflict started, and Gaza's limited tourism capacity declined further. A lot of cancellations, reduced bookings, and heightened travel restrictions were placed due to safety concerns. Travel advisories discouraged visits as well. Travel insurance increased by up to 30%, and major revenue losses, increased unemployment in tourism, and long-term damage to tourism infrastructure is present in Israel and Gaza currently. Now, talking about the humanitarian sector, conflict disrupts aid efforts by AFSC and UNRWA, which is basically these aid groups. And there is a critical need for food, medical support, and shelter for affected people. Logistical and security issues hinder aid effectiveness, and there is mixed investor interest. Initial donations were high, but the long-term funding will drop overall because the conflict is going to keep going on. Aid organizations face 20% higher transportation costs and security costs, leading to low efforts and additional funding needs. Finally, in conclusion, the Israel and Gaza conflict has created volatility across various economic sectors with increased defense spending, energy disruptions, and significant losses in tourism and humanitarian aid. This underscores the interconnectedness of geopolitical events and global economic stability. and these are my sources. Thank you.
Great job, Anya. What made you choose to focus on the economic side of the conflict? Was there anything in particular that drew you to it?
Well, so basically my mom, she tried buying stocks and she tried pulling out stocks from the ones that she bought. And then basically what happened was she was supposed to get a certain amount, but she ended up getting a lower amount than what she expected. And it was during the time the conflict started. So we were just like, I was drawn towards that and I just wanted to like research more about that and how that would have happened.
Yeah. Was there if the did you come across anything in the data that suggests what's the greatest economic risk if the conflict continues? Like where would you see the biggest impact?
Well, I guess it would be, I haven't really come across that, but I guess it would be in the defense and aerospace sector as well as the technology sectors. And well, I guess it's like all the sectors equally because they have such a great role in both the areas because Israel is like big in tech and Gaza has lots of like textile industries. So
Mhm.
because of that, there would be big variations and drops in the markets in general.
Yeah, it's interesting. I'm even curious to go in and wonder what Israel pulls in tourism to see that's down 81%. I'm curious what that actual translates into monetary value. And
Mhm.
then not surprisingly, right, the defense stocks went up,
Yeah.
Lockheed Martin, Raytheon. So great work. I appreciate it.